everybody. This is the good work that's been done by the discretionary funding review, and I think made for quite interesting reading. And some of the information that's already been shared with you around, and what's really shocked me is the cost in administrating discretionary funding funds, the fact we lose so much of that money to, or general rate money to administering what I consider overall not a great amount of money, but still a huge amount of cost associated. So I'll let Nick talk to that. So this work here and this workshop today is to let Nick and Axel and the team share their report with you. And I think we have momentum coming in a little later on, don't we, Nick, to talk to us as well again. So with that, I'll hand it over to you, Nick, and away you go.
Great. So Julie and I will be speaking to the first part of this briefing. The first part, which is a recap of some of what was discussed in the LTP workshops and briefings. We have a period of time where it is just us. We've got staff and elected members present, and then partway through, we're inviting a few guests to speak about one of the different options later on that can be considered as part of this review. And we'll also make sure that there is an appropriate time for any questions without any external participants as well, to make sure that all elected members feel that they can have a free and frank conversation about this. So we'll start with a bit of a recap, and this is something Julie's going to start on, but this is really the flow of things, having that recap, wellbeing trust discussion, a very brief presentation, but this is really more about getting to know a little bit more about what Momentum Waikato does, and then having an opportunity for questions and a discussion around next steps. It would be useful to hear the views of elected members, because that will help guide the next steps that the steering group would be looking at. So, Julie.
Yeah, thank you. Good morning, Your Worship. Good morning, everybody. The purpose of me presenting this side of the slides is this is the work programme that we had been working with. And with the Mayor's request to review funding and my request to understand all of what sat behind those funding, just wanted to recap where we've got to so far. So the Funding Review Committee had started to look in its first phase at discretionary funding. And you'll all be aware that on the 18th of October, the recommendations that the Funding Review Committee put to you were approved at the Strategy and Finance meeting. So they're now going to become operational, and we've already started our way to talk to the community boards about them holding their money and preparing them for the redirection of funds to this, what we're calling the CAB budget, which is Community Aspirations and Blueprint Budget. So we're making our way out to all the community boards now. The other phase of looking at funding for the Funding Review Committee was around the Wellbeing Trust as well. So this is really what we're focusing on and talking to you about today and talking with you today. Thanks, Nick.
The final thing I'll just say on this slide is just a reminder that on the Waikato Foundation Trust, if there's anyone that's unfamiliar with that trust, it was the predecessor organisation to what became the Waikato District Community Wellbeing Trust, as well as several other entities, which we'll talk about later, one of them being the Vibrant Hamilton Trust. So that's just for anyone that might not be familiar with that organisation there. Okay, Julie.
Yeah, thank you. So this is a slide I like to call shock and awe. This is a slide, and I think His Worship talked about it earlier. When we calculated how many grants had been given out through the 2018-19 and 19 and 20 financial years, the total amount came to 158,000. And we originally broke that down to 39 cents for every dollar. But basically, it's the equivalent of $39,000 that we spend for every 100,000 that is distributed. And with the Wellbeing Trust, we also have the additional expense around fund management fees that take place over that time period as well. So if you think about what we're actually wanting to deliver for livable, thriving and connected communities, the main push for this was understanding the waste that sat in the process, as well as the resource waste and how many people had to be involved in it. And then in addition to that, the management fees for somebody to manage the funds on our behalf. So this was one of the key things about why we did this review. Thanks, Nick.
Great. So just looking back on what was covered earlier in the year. So this is the information that was presented back in approximately March through the LTP process. So the Wellbeing Trust supporting our communities, and certainly like the view of the steering group and also of staff is that there has been a good rate of return in the way that it's being currently managed. So when we're looking at some of those areas where we've identified some of the areas that there's definitely opportunity for improvement, there's also coming with the acknowledgement that there's been a good rate of...
You hopped out too quick. You listened to some boring shit. I've gone... Oh, sorry.
Go online here, please. You shouldn't be here.
Sorry about that. I'm not sure what's happened with microphones and everything. Did anything come through before?
Yeah, no, yours is coming through. It's the bad language and somebody who obviously shouldn't have been around a microphone.
Yeah, okay. I'm not sure where that came from.
No, I don't know where it came from. I'm pretty sure it didn't come from you, Nick.
No.
Oh, and who said it was boring? Cheeky bugger.
I know this won't be everyone's cup of tea. So, yep, at the moment, other things we notice, not structured in a way that's set up to receive philanthropic donations. So this is an opportunity for growth in the future. And it's one that I guess in the current state, we're not really set up to be in a position to receive additional donations, nor is it in the position to give confidence to prospective donors that the Wellbeing Trust would be a good place to help invest in and grow that fund. And the point that I mentioned at the start around the Waikato Foundation Trust, one of the other things that was identified is that there is political risk associated with the structures in its current state, and we don't even need hypotheticals for that. We can look to our neighbouring councils in the sub-region, where we have the Vibrant Hamilton Trust, which was essentially it's like the brother or sister, the sibling trust of the Waikato District Community Wellbeing Trust. And a decision of a previous Hamilton City Council was to put all of the trust funds towards a single project and to wind up the trust. So that is a political risk around the current structure as well. And there's certainly, it was raised by the steering group that it's worth having a look at those kind of protections that can be in place to ensure that a fund like the Community Wellbeing Trust is protected for the long term, and that it continues to give intergenerational benefit to all of the communities of Waikato District, not just potentially going towards one project and then the fund is gone forever. The other point that was raised earlier when we were going through the LTP discussions, there was no clear link at that time for the community aspirations, the way that, and this was not unique to the Wellbeing Trust by any means. It was really that across all of the discretionary funding, it was identified that there wasn't clear links to livable, thriving connected communities. So that as an observation is by no means being critical of the current trust in the way that it operates. It was just really, that was something across the board, including all of the discretionary funds. And as Julie's already mentioned, there was significant staff time and democratic oversight. And that was something that was worth investigating to see what other options are there. Are there potentially more efficient ways or other outcomes that could be improved by looking at different alternatives? Just before I proceed with this, are there any questions with what has been discussed so far about the observations of the working group?
Anybody got any questions? Sorry, I can't see people, so you'll have to speak up if you want to. Councillor Maguire.
Yeah, I'm a bit concerned that you're worried about what we pay for the looking to the people that look after our wellbeing trust fund, because the return we've got on that, we've doubled the size of that over the period of time we've had it there, and you haven't suggested how you would run it otherwise. So
yep.
I would be strongly in favour of, well, I would like to see it leave the format it is at the moment, the way it's managed, because it's done extremely well. And you haven't yet, Nick, the other thing, and Julie, you haven't come up with a scenario that finds a way to allocate the funding any cheaper than...
Thank you, Councillor Maguire. The one thing I would say just personally is that I think that when we're identifying the 62,000 of the fund management cost, that isn't a concern, and certainly that would be comparable to many reputable fund managers for the kind of percentage of service fees that would be charged. So if we're looking at any potential options, it wouldn't be as a reflection of that is, that is an unreasonable cost. It's just that there might be other options if it's structured in a way that the trust can actually benefit from pro bono fund management. So that would mean that there are more there are options that will be discussed later, and it will be more cost effective, as well as having that same level of quality of fund management as what we currently have. So this is no way meaning to be any reflection on the performance of the current fund, which the steering group acknowledges has been very well managed and has had a strong return.
Alan, can I just jump in here, please? I think Rob's question, whilst a good one, is preempting what's coming shortly.
By the end of this, I think that is a question that we can answer as to what alternatives are there.
So I'd suggest you keep going, Nick. Thanks, Noel.
Okay, great. So the steering group recommends that the Wellbeing Trust transitions from current state as a CCO of council to what has been described as a protected and enduring charitable trust. So these words are really critical because it's speaking to the intent. Firstly, protected, that is referring to protection from some of those scenarios that have been discussed, where it's, where we've seen councils in our sub-region that have taken their portion of those funds and put it towards one particular project. So it's about ensuring that it is a fund that is protected in the long term, that is enduring, and is set up in a way that it can benefit communities over many generations. One of the other things that is really important that the steering group has noted is that Waikato district, if we're talking about protecting it for an area, it needs to be protected for the area as defined by our current boundaries. As you know, there is local government reform on the horizon, and while what we're talking about in terms of boundaries is really like over many generations, the unknown about the future structure of local government. So it's not even just around current reform, it's what might local government look like in a generation's time. And the opportunity around a protected and enduring charitable trust is that it can be structured in a way that no matter what happens to the boundaries of Waikato district in the future, that it is protected to cover the communities that are currently covered by Waikato district. So if there's any part of the district that in a generation's time was part of Hamilton City, or if there was a part that was, if it was structured in a different way, or if there was any changes with the Auckland boundary, no matter what happened, it is protected there for those communities. And so that removes an element of risk. And it also means that other donors are more likely to support it if they know that their community is definitely always going to be covered by this trust. So that is the one major recommendation from the steering group at this point. And this will be familiar to some of the councillors that might have seen, we had a slide like this during the LTP workshops. And this is where we talked about essentially the current state, some of the pros and cons, as well as the direction that the steering group has proposed, which is around that protected and enduring charitable trust. So as you can see here on the current state, this is the view of staff that have been involved in the funding review process, as well as the steering group. We can see that, speaking to Councillor Maguire's point, one of the pros of the current state has been that it has been generating good rates of return under the professional fund manager, Gareth Morgan Investments, and then Kiwi Wealth. Like, that has been one of the pros for the current state. There's certainly been delivery on some of the activities that that the trust has been able to invest in. Flexible decision making and scheduling, these are things that are a positive of the current state. But also, as you can see, there's a number of cons, which are the points that were identified through the funding review. Some of these around the higher administration costs compared to potential alternative models, higher staff resourcing. And a key point for me is that the current state doesn't attract match funding or philanthropic investment. So at the moment, it is really about just growing the investment portfolio that we have, but there isn't an opportunity to try and attract other philanthropic investment to try and really supercharge the growth of that fund for the benefit of the district. And there is currently no mandated strategic links to the council vision. So many of the funding decisions of the trust will align with what council is trying to achieve, but it isn't, at the moment, it's been purely at the discretion of the trust, and whether it's something that the trust and the council wants to support. So it's a little bit like, essentially, it's still like what we had for a lot of the discretionary funds prior to the recent decisions of council. The final con I would just say is that there are no opportunities under the current structure for pro bono fund management. So the current structure does require us to pay a fund management fee. As it was noted earlier, that was the 62,000 over that 2-year period that was looked at earlier. There are opportunities for certain charitable organizations to get the fund management pro bono, and that pro bono arrangement is an acknowledgement that the work that the trust is doing is of a charitable nature, and there are some very reputable fund managers in New Zealand, and we're not talking about kind of rogue or kind of unknown ones, but some of the highest profile fund managers in the country that offer pro bono support as part of their community. I guess you could look at it, one part, they see that they want to do public good, and this is a way that they can support great outcomes in the community. From a more cynical point of view, you could say, well, it's a great marketing opportunity for some of those fund managers to provide their services pro bono, because they can then use that to show this is the good that we're doing in the community. But regardless of the intent, what we can see here is that there are options where you don't have to pay for that amount of money, and it's then a decision of the trust. You know, if you had a saving of 62,000 over that period of time, is that potentially 62,000 that could be invested back into the community? Is this 62,000 that could go towards the growth of the fund? And that is something over a generation's time that could be quite significant. So if we just jump over here to proposed state, this is the proposed state that the steering group is suggesting. This is one where we're looking at those longer term protections, the opportunity to attract philanthropic investment, and also trying to find an option that reduces some of those significant administration costs. The costs that amount to nearly 39 cents for every dollar that is given out from the Wellbeing Trust in its current state. And the final thing here of a pro for this one is that you can structure it in a way so that any additional donors would that want to help grow the Wellbeing Trust would be in a position that they could get a tax credit on their donations. So this is something that we would want to, that if there was an opportunity to have a protected and enduring trust, there are opportunities like that, some benefits that can support other donors that might want to work alongside council to help grow this fund for the benefit of our communities. The only con that I have noted here, and this is debatable as well, is that whatever this option is, there is a bit less of a direct involvement or control of council, which could be seen as a pro or a con. But the important thing to remember is that any arrangement is decided by the council. So there is no point, like the council would always be in a position to negotiate what is the ideal structure for a protected and enduring trust. So the council will always be in control of the kind of considerations and trade-offs that may or may not need to be made. Now, we will have Momentum Waikato joining us shortly, but I'm not sure if they have arrived yet, but perhaps in the meantime, before that happens, are there any questions about what has been discussed so far?
Could you take your screen down, Nick, please?
Yep.
Hey, look, everybody, as you can see, the cost of administrating funds is not cheap. In actual fact, when you actually work it out, it's costing us miles too much to administer far too little. And if it's not actually, and it's actually false economy, because it's actually we're giving out, for every dollar we give out, it's costing us 39 cents to administer it. But the ratepayer's paying for it, so they're actually paying for the wellbeing trust part of it as well, along with the fund manager's cost. Now, you'll always have a fund manager's cost, but the administration cost is far too much for far too little to be put out. So we need to look at other ways where we, as Nick said, this is not about giving the funding stream away. This is about finding a better way to manage the fund stream and actually still getting those returns to distribute within the wider community, but also protecting it in perpetuity for the future. And Nick's raised an interesting point around what does local government look like going forward in the future. And last thing I want to do is lose it out of our current boundaries. So this can be set up in a way that protects it in perpetuity for our current district and boundaries as they are today, and not what might be in a decade or 2 decades time, and what it might look like. So we just need to take these opportunities to do this sort of thing now, while there's a will to do it, I suppose, and my sort of push to get this sorted out for once and for all. I'll go to Councillor Beck first.
Yeah, thank you. And just picking up on that last point, Marilyn, and I guess the point Councillor Maguire you made earlier, that we have this fund which we didn't earn. It was there before us, and we're the current lot of politicians who've got the ability to make sure it's there after us. I think that's a really important point that's come through. So the words that Nick used were intergenerational, protected and enduring, right? So we only need to look around us to fellow councils just over our borders, where they also had this lump of money to start with, and their elected members decided to spend it on current initiatives. So it's gone, and only ours remain. So my hats are off to the trustees and the politicians that went before me, because you've not done that. You've hung on to our money for the ongoing benefit of our people. And of course, it can't totally be protected, because it will still be under the control of council, no matter how we do it. But we're just going to, I said this to Marilyn the other day, we're just going to put another padlock on it. We still have the key, but there's another padlock on it to make sure that as much as possible, it stays for this current purpose: long-term, intergenerational, protected, enduring, those sorts of words. And through a structure that actually gives us more money to give away, because it's cheaper to administer, but also might attract other donations because they're tax deductible and match funding. So I think that's for me is what drives us. We're going to do it smarter, we're going to do it better, and we're going to ensure that we can keep doing it by taking it out of the sort of the direct control or a simple vote of council to undo. So that would be my main takeaways at this point. Thanks, Marilyn.
Thanks, Councillor Beck. Councillor Church.
Thank you, Your Worship. Yeah, I agree with the sentiment of Councillor Beck. The opportunity, I think the fund in the past and as it is currently has been well run and been in line personally with the LTP and even annual plans have come forward for projects that council has identified. But I personally have been concerned about the will of politics and the sway of that over time as to whether we're making logical decisions and fair decisions with equity as well. So I agree at any time it had some opportunities to be not used in a far more productive way, more modern way. So I agree with those sentiments. A couple of things that I'd like to say is I think with building the fund and having the opportunity for additional donators who want to actually contribute, and also I think is a really good opportunity that we need to maximise that to help make our vote go faster. One of the things out of this review, and this comes with the underline that I have complete confidence with the ability of the staff involved, but as part of this review, I'd be interested to see what efficiencies within council we have identified within our whole processes around funding or community engagement, because I think that in this review it's really important for us to always look internally as well as to how can we identify what we could have done better and faster and better to perhaps lower the 39 cents down or whatever, and what our way forwards will be in the future, as well as our external and our way forward. So I think it's a good step forward for this fund to align ourselves with, particularly I think it's important what partnership that is. If it's someone who really can understand our grassroots level, because we still are 50% or more a rural district council. So rural means very small communities, really well spread. And I think that we want to make sure that those people feel like they're heard and that they get equity and that it doesn't all go to the towns or to particular projects, that we are fair in our sharing out, and that those things are understood about it. Where something like community board funding or discretionary funding in council or wellbeing funding, it's a bit more grassroots and understand those better. So I think just if we can assure our residents and ratepayers in that rohi that we can that's understood and that they have the capability to engage and do it more efficiently than 39 cents, I'm all for it.
All right, thanks, Councillor. I'll go to Councillor Smith before I come back to the members of Momentum. So if you can just hang on for a minute. Councillor Smith, I'll take you as the last speaker.
Thank you. And as just to remind everyone, I was part of this, I am part of the steering group. And it's fair to say, even though we've got Momentum here, I was totally opposed to taking this outside council without trying to identify those initiatives that Jackie's just talked about. So for me, we look at what our partners, councils, Hamilton and Waipa have done, but we also need to look internally and say, what did we do with the Ports of Auckland funding? And staff came to us with a way to fix up the sewage system in Pocono, and we jumped at the opportunity. Some were opposed, some, the majority was for it. So we whipped a whole lot of money out that came from the Ports of Auckland and put it into one community, probably one of our best growth communities at the moment. But this is all on the political whim. So this council has done something similar to what Hamilton did with a bucket of money. But I think this is an opportunity that we need to absolutely look at. And it's been good to be part of the work that's been done to get the understanding and the potential of what's out there beyond council. And it's sometimes really good to look outside, as if we continue to look within, we won't progress. So I'm just commending this process and ask you to listen to Tim and his team with open ears and an open mind. Thanks very much.
Thanks, Councillor. At this stage, I'd just like to welcome both Kelvin Eccleton and Tim McIndoe and Janice Lapwood. I see you both, the whole three of you have arrived this morning, so it's certainly great to see you all in these, what I consider incredibly difficult times. And obviously we all these days seem to be working from home, which has its benefits, but it also has its disadvantages too, as to think that the only interaction we have with other humans is through a screen. so yeah, a little bit weird, but as a farmer, I'm sort of used to staying on the farm for weeks at a time and not communicating anyway. So yeah, but hey, look, welcome to the three of you. I have virtually all the councillors. The only, I think, one that's not here today is Councillor Patterson. Unfortunately, he will hopefully join us, but everyone else is here. So I don't know which one of you is going to head off. Kelvin is the head, or Janice or Tim, but Kelvin, do you want to kick off?
Yeah, I'll kick off. Thank you, Mary Ellen and Namahi Kia Koto, everybody. Kelvin Eglinton, I'm the CEO of Momentum Waikato, and obviously joining me today is Janice Lapwood, who's our Development Director, and Tim McIndoe, who's our key engagement advisor, our generosity ambassador, which is fantastic. So thanks. Really, I'm just going to do a really brief overview of what we are. And I know Nick's done a lot of work with you already on that. And then really it's just an opportunity for you to ask questions of us and interrogate what we're doing. And I guess, as a community foundation, our role is to grow an endowment fund for the region. And we have got funds currently that exist across the whole region. Janice and I started the team. We were about $13 million. We've now grown that to $40 million in the last 3.5 years. And obviously we've also raised $80 million for the regional theatre, but we've also got impact investment projects at Houchin Road and also in Putaru around affordable housing. So we're starting to be, as we grow, we've been active investors in utilising our funds as separate to actually enable projects to happen in those communities. And then also we're a conduit for funds through to different projects, so like the park in Tamahere, or through to the different projects of need that have come about, particularly as COVID. So we operate very much in that gap between the pure market economy and the local government or central government provision, and we operate in that space. So we're very much a leadership agency where we try and connect and convene, and you've probably best seen that in your locality at the Kimihia Lakes development and the projects we've done there. And I'm actually a ratepayer of yours. I live in Matangi on Tamahere Road, so I'm part of who and what you do. I guess my opening statement would be, if you're really clear about what you want this fund to achieve and you're really clear on the purpose both now and into the future, Momentum is simply a mechanism to enable that. We're not the only one, but we are the one that is in your region, and we do it on a low cost basis because of the $10 million 70-year loan that was granted to us by the Donnie Trust. So that obviously offsets and subsidises all of our costs. So we're not like your usual charity. We're self-sustaining. We have our own investment fund. That investment fund sits around $16 million, and that's the money we utilise to do all of our activities, while the remaining funds make up the remainder of that 40 million. And some of that is land and assets, which we lease out and have services around a wellbeing village. And some of that is cash, and some of that is other equities. But those are ring fenced. So the point I'm making is, if you are really clear about what you want this fund to do, where you want it to go, and how you want that to be distributed, the proceeds and invested, then we're just one of those options. And I know, our intent aligns pretty well with local government and the 4 wellbeings and how that rolls out. And we've got numerous examples we can talk to you about the different funds we've got set up that range from sort of $11 million from the Donnie Trust down to a $50,000 bequest fund that's come through at different times. And there's a range of options in there. But the leading principle is that it's donor-led. So this is your fund. We're simply the administrative piece of it, the accountability and investment piece of it, to enable you to deliver what you want into the future and be the stewards of that. So I'm just going to I'll wrap up there and allow people to ask questions, I think, unless Janice, there's anything you wanted to add.
Sorry about that. I'll just unmute me. No, that summed it up pretty well. And yeah, I think looking forward to seeing what people's views are and how we might be able to help.
All right. Look, thank you both, Kelvin and Janice. Tim, you got anything you want to say? No, all good?
No, I'm fine, thanks, Alan. Kelvin's outlined it pretty clearly, and the whole point of this meeting is for us to be able to hear what councillors are thinking and also answer any questions you might have for us.
I think, so if I can just sum it up on behalf of what council and what we've talked about prior to your arrival, is basically making sure that the money is secure within perpetuity for the future, despite what might happen with local government reform and that we actually ring fence it for existing ratepayer use base and allow that to grow that fund for council to distribute in which way the returns on it, as which way it wants to for the future. And we'll put some guidelines around what that might look like too. I think it's more around for the councillors understanding that this is actually not about us giving away control. It's about us giving it potentially to Momentum to manage on our behalf, because one of the things we've realised through our review is the high cost of administrating funds, which is absolutely, I don't think it's acceptable at its current rates for us, and we need to look to alternatives. And I think considering Momentum, and I do know who the founders were of Momentum and how it was set up, and I think it was set up for exactly this type of thing, along with other people who wish to be generous enough to donate to it or bequeath money and a whole lot of things. So I think it is a trust that is for very much for the region, but more importantly for us, it is somebody we can use to actually help maintain the wealth within our trust, who has done, and many of the people have said this morning, Kelvin and Janice, it's doubled its value in 10 years. So it's done exceptionally well. And you just start to think what it might look like in a decade or two and what it will return to those current ratepayers within that boundary of that. So look, with that, I'm going to open it up to councillors. I see Councillor Beck's got his hand up first, so I'll go to him first.
Yeah, thank you. I wanted just for assisting and understanding, perhaps Tim, Janice, you could talk to us about how practically it might work for a trust like ours. I know one of the, possibly not the most common way you do things, but one of the way you do things is to take over an existing established trust and run it under that trustee, which is probably where we've got the most appetite. I wonder if you could just talk to that briefly for, so all the councillors have an understanding of that from a sort of a process point of view.
Sure. So a trust transfer is a simple, is relatively straightforward, and we've done that with the Donnie Trust, and that a deed is aligned with Momentum so that everything within that deed is led by what the intent of your wellbeing trust is. There'd be a distributions committee set up, so annually the whoever's sitting on that distributions committee from the council would be leading where those monies are going out to. So Momentum's role would be pretty straightforward in terms of just we're the guardians of that fund. We would ensure that it is protected in perpetuity, as you said, Mayor, and that the funds are always protected and used for what the intent is.
Yep, good. Thanks, Janice. Councillor Maguire.
Yeah, I just curious to know what your costs are of allocating funds to different individual organisations. The driver behind this exercise has been the cost of allocating funds, and I'm just wondering whether you can do better than us.
Yeah, thanks, Councillor. So when we started these discussions, we didn't charge any fees at all for the transfer costs. We take involved with all that, and because the bonus is you are one fund allocated within the overall endowment fund. So we pay one set of fees. We don't pay individual fund fees. So we have a discount rate because of the size of that endowment across all of those engagements and across our 2 investment advisors. So we have initiated a fee structure though, because as the fund gets bigger, we need to be able to subsidise the fees rather than pay them all across all of those funds. But the fee structure at the moment, which doesn't come on board until early next year, until 2022, because we know there are groups like yourselves that we've been talking to and said, well, there's a no fee structure currently, is 1% of quantum annually up to a maximum of $35,000. So if you add that up, that's a lot less per fee and transaction fee that you probably have with your current advisor. But we then also take account for all of your accountancy fees, your auditing fees, your delivery and distribution. So if I give you an example, with the Donnie Trust, they have an existing advisor. We've adopted that advisor with us. So they've wanted to keep a relationship with that advisor simply because of history for a period of time, for about 5 years. They've wound up the trust, the fund is there, but they still act as advisors to us on distribution and all those good things. So just like you are. At the other end of the scale, we have the Waikato Medical Research Trust. They're bringing their fund to us to manage, and they're using a fee and paying an admin fee because they want us to do all the distribution and all the administration of their organisation. So, and that totals $50,000 complete. So management of fee and the admin. So that's for a whole medical research fund of $3.8 million, and that's applications they take for medical research. So in that scheme, for you, if we were simply going to be your fund manager and do the distribution through the deed as Janice has outlined, if it comes in next year, it'll be 1% of quantum up to $35,000 as a ceiling.
Thank you.
All right, which I must say is cheaper than what we're paying now. So, because I think we sometimes don't take into all the hidden costs of audit, internal administration and things like that. We just, in this situation, we do have a fee from the fund manager. So if we take that and what we're paying internally, it's a hell of a lot cheaper for us to move it off site than actually keep it on site, which means there is in reality the opportunity for more investment within our wider community going through. Right,
but if I could just add one thing.
Yeah.
At the moment, the council's doing it for administrating it for nothing, while any other outside, not for nothing, not the allocation of the funds, but just looking after the fund. But anyway, yeah, I see Alison smiling there and reckons I've got it totally wrong. So,
and I'd have to agree with the councillor because it's just costing ratepayers. It's not for nothing. The fund might think it, the trust might think it's nothing, but it comes with a huge cost.
But all ratepayers are building a fund, contributing to building a fund.
Yeah, I know, but it's a little bit of a false economy. Right, councillor Beck.
Yeah, I advise Alison never to play poker. That would just be a bit of advice. I'm just wondering if you could assist with what the current fund managers are that you're working with.
Yeah, so our base fund managers are Craig's Investment Partners and Forsyth Bar. And then, as we said, with the Donnie Fund, they asked us to retain their advisor through Craig's and bring in Aspiring Management. So absolutely easy enough to do because it's just simply another account that we have sitting within the overall endowment. So, and when we adopted, or when we transferred the Houchin Trust, which was $500,000 cash and the land and assets out at Houchin of 2.3, they had an advisor at Kiwi Wealth actually, and they wanted us to stay with them for at least 2 years because of a relationship they had, and we did that until such time that we compared costs and fees across all of them, and we merged that up. But we can easily do that. The rolling average of 5% returns has been 10.3%. So across those providers, and this year we got 9.63% return, so slightly down on events. Just on that, we've just undertaken a review with Annabelle Cotton, and we've also compared JB Weir, Aspiring, and we also looked at Jana Wealth Management, who are big wealth advisors who look after Trust Waikato as well. And what we've found is that we get a pretty good deal because we're part of the Community Foundation network on fees, but effectively we're buying a market product, and when you look across all of their allocations of assets, we're only talking percentage difference between it. So it's really a management risk by separating out between Craig's and Forsyth and Aspiring. But we're beating market return, which is still pretty good. To go to someone like Jana, which are a massive, we're quite frankly just too small at the moment. Until we hit 100 million of investment, they don't really want to know about us. So there's not a lot of option out there. There's different options, but they all play in the same sandpit, if you like. We've just got to make sure that the way we do it is by having your fund as part of an overall endowment. We just separate those fees across all of them. So it works quite well.
And just adding to that as well, we build really close relationships with our fund managers. So for instance, Craig's at Christmas time, they have a relationship with our community foundations around the country, and they allocate us $20,000 each year to give out to community organisations in our region. And we just identify who those community organisations are. They don't need to apply. They don't know that the money's coming their way, and they just get a phone call to say, look, there's $3,000 going into your bank account. Can you give us your details? And that's just a nice thing that we just work alongside the fund managers so you can see how we're building those trusted relationships. So it doesn't become just so transactional.
Thanks, Janice. Councillor Church.
Thank you, Your Worship. So I guess for Councillor Maguire and I, so as me as a chair and Councillor Maguire, and they're obviously with the mayor, the Wellbeing Trust in this last couple of trainings have been quite close to our hearts, and we've put a lot of thought into it with the other independent trustees. So, but I think that the way forward is to move away from the model that we've got from a CCO, and I'm interested about just a couple of things that, the partnership with Momentum. On the pro side, I'd like some input from you around, I see the relationship growing if we hand our fund over to you, is that there's opportunities to us for our communities and the people looking for funding to actually have closer relationships with your other funding opportunities. Can you expand a bit on that sort of opportunities that may be available with Momentum?
Yeah, sure. So one of the approaches we've taken is obviously two parts of that. One is if people are looking to donate or leave bequests or set up funds or trust transfers, rather than have individual funds for every individual person. For example, in the environment space, we're talking to 3 different groups about establishing an environment fund for the Waikato. And I literally, the call before this I was with an environmental group looking for funding who wanted to be able to support that absolutely tied into that network. Likewise, we also have a network of generous donors and philanthropists, largely off the back of the theatre, but also because of the work we've done in terms of identifying philanthropy and donors and people who are willing to donate across the region. So when we ran the greatest needs appeal, we 3,000 different people contributed to $70,000 worth of funds, which went straight back out the door. So that's the sort of linkage we can find. So if there are specific projects, and we're doing the same thing for the Tamahere Park with Councillor Beck, and we can do that work now. So if you have a specific need and we're aware of it, Janice and her team can scan through the database and work out if there's opportunities to connect into that. We're also part of the Waikato Funders Group. So we sit alongside Trust Waikato and Well Energy Trust and DV Bryant Trust and the Len Reynolds Trust and the Gallagher Foundation and so on and so forth. And we meet quarterly on different projects that have a requirement. And where that works quite well is that if the big funders say no to something, but it's in our patch or in our priority areas, we can then go in and make sure that we collectively get a project over the line. It's not huge funds necessarily, but it is about the collective impact.
So one of the, I've got a couple of questions here, if that's okay, Your Worship. So, and of course, one of the issues around the North Waikato, of course, is that with those old territorial authorities, borders, and that you are up in the North Waikato, which is great, and also doing that cross-border into the Auckland, because no matter how big Hamilton comes, it is not the largest town that affects the Waikato in many ways. I guess that those things I think I'd like to personally have more understanding as we go through this discussion around what effects over time and the ramifications for those funders, and I guess that focus on Hamilton only in the Waikato as an example, like the theatre or other projects, because I think there's other towns that are coming up, even like Taupori, for example, there's other places in our area that are coming up. One of the things, obviously from our fund, we're going to go through our long-term plan, we go through our in our processes with all of our community projects, and we go through, which is great, all the master planning. And from that, you're going to, what I understand is you're going to then meet once a year to look at applications. But what I don't see then is the flexibility, one that seems to still be quite politically run, as opposed to a community group, say an environmental group deciding to help the River Authority with planting the river or whatever, coming to you to look at our fund because it's in our area, and having equitable opportunity to be considered, one, and two, also, where is the flexibility if it's going to be like a once a year fund decision making, where is the flexibility built in? Because I think in our times to look at things, personally it feels a bit naive to actually say that once a year based on the LTP, which rolls over every 3 years, which is a 10-year plan, and aspirations by community, is potentially too slow. So how are those things going to be considered or more managed?
I'd actually hand that back to you. That's your decisions. If you want to do it twice a year and do applications differently, if you want to be open to how you establish the deed, that's entirely your call. And that was my opening statements, that this is your fund and how you determine the distribution, and that is part of the deed that you would sign with us. And then we deliver on that for you on that behalf. So that's entirely over to you as the elected members or the trust members to make that decision and write that into the deed as how you'd like that to operate.
I think just to clarify that, Councillor, that the concept here is that more than likely the trust would maintain its own status in relation to reinvesting back into the fund. Currently that is 50% actually goes back in for reinvestment, 50% for distribution, even though we're not actually currently distributing that other 50% at the moment because lack of probably quality projects. But that allocation of funding would still come through to council, and it's at our own time that it suits us to distribute it. All it is, it would be passed through from Momentum to us, and then it's up to us to figure out what we're going to do with it. So it's no different than where we currently operate. So I'll go to Councillor Gibb. I've got other calls there. Councillor Gibb.
Yes, good morning, and good morning to Momentum people. Nice to see you. I just have a question around your structure and the trustees of Momentum. How are they appointed, and who, how does that go into the future as well?
Yeah, excellent question. So it's done by each trustee has a fixed term, so there's only 2 terms of 4 years, and they must step down, and it's obviously on a progressive rolling term. but it's done by an appointments panel. So every year the appointments panel meets, and they also look at the performance of the fund and the performance of the delivery of the activities. So there's this oversight board that's determined by the three mayors, actually, of Hamilton, Waikato, and Waipa, nominate a role, which has been Doug Arcus and now is Charlotte Isaac. The head of the IOD, the chairman of the IOD, the chairman of the Well Energy Trust can nominate someone because they were the initiators of funders. Waikato Tainui have a role, and the chairman of Momentum, and then they select three others as appointments panel people. So that appointment panel meets on an annual basis. We pull it together. They look at the board performance, and they look at any replacements that are coming up over the different terms. They do undertake a skills and matrix against our strategic plan and our performance, and they look at that, and they make recommendation to the board as to who should be then appointed to the board.
Oh, that's great. Thanks very much, Calvin.
No worries.
Thanks, Councillor. Tony. Turn your mic on, Tony.
Yeah. Your Worship, it's really probably just an observation that, you guys as councillors are really fortunate that you've set this fund up and operated it in a way which is absolutely totally consistent with what Momentum would do for you. You've done this in a professional way. You've preserved the capital, you've inflation proofed it, you've grown the fund, you've only used in a portion of the earnings to actually protect that fund. And so the beauty from my perspective is that you're going to have the ability to have Momentum maintain that integrity for you and to operate this fund in exactly the same way that you have. The upside, and I guess from my perspective, I can only see upside at the moment, is that the fee structure and the administrative burden, or the administrative resource taken within the business to support this essentially disappears from a council perspective. So I think that it's the fact that you have operated this fund in the way that you have that makes this conversation really easy if you did want to continue in this way with Momentum.
Thanks, Tony. Look, I've been on this since the creation of it, and I think the one benefit that I see is it takes away the burden of responsibility by the trust members, current trust members, to actually manage the fund. Effectively, that will be managed by Janice and Calvin on our behalf. We'll just lay down and predetermine effectively what return we want for back out of the dividends effectively, and if that still stays at 50%, and then within council we can decide how to distribute that fund to worthy projects, and that may even mean the trustees staying in place for distribution purposes. But at the end of the day, it's about moving the management of it and taking that burden away from council to run it in a far more cost-effective and far more efficient way. And I think that's what the real plus is about this going forward. So, Calvin, I'll go to you before I go to Councillor Church again.
Yeah, I just wanted to add, part of the rationale that we've seen an increase in trust transfers, particularly, and quite clearly of smaller, more modest funds, is one, the difficulty in getting trustees, which clearly is not a problem for this trust because it's through the council, but it is the accountancy costs and the audit fees. I mean, I'll give you an example from Momentum. 2 years ago, we paid $12,000 for our fees. We're now paying $25,000. And that's because of the labour shortages and the cost recoveries that are required by the auditing firms. So we only have to pay that once across all of the 15 or 17 different funds we've got, whereas otherwise you'd be paying a similar fee structure for one audit for the $5 million fund. And it's that's the sort of costs and regulatory accountabilities that are coming with the changes to the Trust Act as well. So those are the other types of more technical reasons that people are starting to come to us, because we bundle all that up in one format.
And I think the other benefit is it is no longer a CCO of council. And that's where the cost burden comes in, is around the fact that it actually is a CCO. Councillor Church.
Thank you, Your Worship. So yeah, I see Momentum. You've got a good reputation, and with good ethics, and I'm sure there's a lot, in the past, and long may it continue. So I have no problems in those areas. I guess I'm interested, when we're looking at returns on investment, which is what you want, but then around the ethics of where you invest and how you invest, because just be interested as to your feedback as to, I guess, is it ethical investment, or what you invest in or don't, or what your criteria are. I think that's important for us as a council in terms of those management for funds.
Yeah, no, thank you, Councillor Church. That's a very good question. We do have our SIPO, so our Statement of Investment and Policy Objectives, and we have a no harm clause in that, which is directed to our investment advisors. So obviously, the no harm concept is no alcohol, gambling, prostitution, weapons, those sorts of things. And part of the review we are undertaking now is actually looking at whether or not we can apportion some of those funds into an ethical, so rather than just doing no harm, can we actually do good? And we are looking at some of that opportunity. There's not a lot of product available yet. There is growing product in New Zealand, but there's not a lot of product yet within the kind of the investment advisors. But we have seen that some of the international ESG funds, for example, are actually doing as well, if not better, than the market funds. So that's certainly our direction, and we're looking at that in terms of what products give us the same return and also do good. So we haven't nailed one of those funds yet, but we are aware that Craig's Investment are looking at establishing an ESG fund, and we would then distribute within our SIPO a proportion of our funds into that. I guess the other part of that is our Momentum Fund, so the funds that belong to Momentum organisation itself, that's 16 million. We're actually taking monies out of the investment advisors, and we're taking that and applying that into affordable housing projects and into the wellness centres. So what we're saying is bond rates and interest rates at the moment, whilst they'll go up over time now, they're returning minor. We can take that out and put that into affordable housing projects. We've got a 19-house development in Putaruru. We're looking at another one at Tikawiti of around 7 to 8 housing. And we're looking with Perry Group to do some work and actually establish an affordable housing company or trust. And we're actually utilising our own funds to do that impact investment in our own communities. So, yeah, it's a really good question. And to be quite frank, we haven't found the right fund yet that gives us the return, but that is on the radar.
Yeah, and it's just a final point on that is, I guess it is complex, and like you're funding and we want it to grow a fund, but I guess it becomes murky as to, great that we're doing works on building houses, but if we're investing our funds in let's say palm tree plantations that are chopping down the rainforest, it's kind of like, I think that's a complex area, and I think wherever we go forward, I think it would be a good story to have a bit more clarity and direction.
Yep.
In those areas of, well, what are we investing in, or do we take a hit on investing because we're not going to do things that are actually going to be counterproductive to building houses when we can't breathe in the world, or whatever the issues are. So thank you.
All right. Is there any further questions at this stage? If there is no further questions, thanks, Kelvin, Janice, and Tim. Appreciate having you here and helping to answer the questions for us, and I'm sure we will be talking further as we go. So thanks very much for coming in today. Appreciate it.
Thank you, Worship.
Thank you, councillors.
Thank you.
Thank you.
Okay, thank you. Right, Nick, back to you.
Okay.
Where to from here?
So really, it's the point now that we're just back to staff and external, staff and elected members. If there are any questions of staff before discussing next steps, it's an opportunity to do so. Otherwise, we've moved straight on to talking about what would the next steps look like in terms of our the work that the steering group is doing. Were there any further questions to staff now that our external presenters have left?
I'll go to Councillor Beck's got his hand up.
Yeah, thank you. You're right. Just us here in private, and of course anybody watching on YouTube. Very much a private conversation. Yeah, so the important point, quite right, is that we're not councillors. We're not looking for a decision. We're not asking to, yes, we're definitely doing this, or yes, we're definitely doing that. This is still information. But what we are looking for is some feedback from elected members today as to where do we then go next? What's the view of the group? Do you have concerns that need to be addressed? Any particular items that need to be coming back to you with more information, et cetera, et cetera. That's really what we're looking for here for this next part. So yeah, I'll leave it for the group to hopefully give us some feedback.
Look, can I say at this stage that, look, I'm incredibly happy with where we've ended up with this. I was quite concerned some time ago around what might actually happen with the trust, because I sort of feel it's a baby that's been there that we've nurtured all the way through, and it's done exceptionally well, seeing dividends of up to 17% some years previous. And even when you're looking at 9% plus is incredible, considering you can only get for 210 days, I think it is, because I'm looking at it at the moment, 1.2% return in the bank. So, I think the returns we're getting and the dividends we're getting are exceptional. All we're looking to do here is ask Momentum to manage it on our behalf. And I actually see huge benefit in the fact that they are a local trust. We know them all. I know all of them. I know most of the trustees. And the fact is, it's run alongside other bigger funds, and we get the benefit of that. So I think this is a win-win no matter which way you go, but we do need to give the steering group some direction here today as to whether we keep pursuing going down this path or stop now. So I'll go to Councillor Gibb.
Thanks, Mary Ellen, and I endorse what we're doing and where we're heading. I may have missed a step and I maybe lost concentration somewhere if you've told me this, Nick. We were talking about changing the Wellbeing Trust to a charitable trust and then allowing people to bequest or donate to it. Does that happen still, and is that going to happen now, or what's the plan?
The earlier discussions, which was kind of looking at this kind of partnership opportunity, I think one thing that's fair to say, and it's also something that Kelvin acknowledged, is that this is one option for the council to consider. I think that putting up the various options in a report, that it would be the compelling option to choose, but there are other options that, in my view, that we do need to put forward, so we're not just putting it as a binary status quo or partner with Momentum. There are kind of middle ground options. However, from what I've seen, these middle ground options do not come close in addressing whether it's the cost of administration. Those are things that you might protect the fund in the long term, but you don't get any of those administrative benefits. So that is something that we can look to do in any report, is to make sure that you see those other options. But just to your point, Councillor Gibb, the model that we talked about, that those kind of opportunities that you said, that would be compatible with what we're talking about with Momentum, especially about the opportunity to try and attract other donors to support the growth of that fund. That's something that we can certainly do under the Momentum option.
Just to follow on from that, so a donor could donate to the Wellbeing Trust, or do they donate to Momentum? They can nominate our own fund.
Yeah, they can nominate the Wellbeing Trust as the recipient of that.
And as you mentioned in the pros, there's still that 33% tax break.
Yes, that's
right.
correct. Yeah.
Okay, thank you.
If I can just add to that, if I may.
Yep.
Yeah, so the issue for us at the moment, Councillor Gibb, is it's very difficult to enthuse a private person or an organisation to give money to a council-controlled trust when they can see, Councillor Smith made this point earlier, that we ourselves, or in fact our neighbouring councils, can then just decide, oh, we're a bit short in the LTP, so we're just going to grab that money. It's very hard to get a donor who wants to do some sort of enduring legacy type request to get excited about that. So even if you change it to a charitable status, you don't overcome that. But putting it a bit more at arm's length, it just gives that feeling of, hey, I've made a donation and the intentions of my wish are going to be honoured, long term, and it's not for every 3 years. It's up for grabs with a new bunch of politicians.
Okay, thank you. Councillor Maguire.
While I've got a great respect for Momentum, I'm just wondering what the timescale is in terms of where this is heading. And I'd like to see the costs on a bit of paper, because he took from 1% to 35,000, and I just because our fee, management fee, I see, was 62,000 over 2 years. Is that correct?
Yes.
So I just want to get those costs in my mind.
We would absolutely need to present those costs side by side so you can make that appropriate decision, and you need to be able to do that, and that hasn't been presented to elected members yet. That would be, I guess, that's what we'd like to know for the next steps. That's the level of information that I would be anticipating that we would need to give to you in order to make an informed decision. So we absolutely need to provide that.
Yeah. So what's the time scale? Anyone know?
In terms of our any conversations with Momentum, this is led, it is determined by the council. So the timeframes are really as fast as or not as the council would like to proceed. That is guidance that we would really value from elected members in this discussion. But there's no time pressure or anything coming from Momentum. It's up to the council around those timeframes.
Right. Councillor Thompson.
Thank you, Your Worship. Thank you, Nick and Julie, for your presentation. I've really enjoyed listening to the corridor from Momentum. This might be a really dumb question, but would it still, whatever path or course of action we take, whether it's under the umbrella of Momentum, will it still be called the Wellbeing Trust, or will it be Momentum? Or is it going to change its name? Or
the arrangement would be entirely set by the council as the donor. So if the view was that that's what we want to protect, the name, it would be that is the Wellbeing Trust, and they would be essentially guardians of the trust around the fund management, but it would still have its own identity. This is actually something that Momentum has changed their approach a little bit. Originally, they were very much focused on having direct funds within Momentum that they would administer. Whereas now, when it comes to opportunities like this, they're actually saying we're going to be much more accommodating. We'll maintain the current trust, and it's so we're actually in a really good position now that they will work with us on the terms that we say this is from our position. This is what we would be comfortable with to have some kind of agreement. So if the view was, maintain the identity of that trust, they would work to support that.
And I think probably before I go to Tony, I think it would be good to maintain that identity as a brand name. It's been around for a decade now. It's a strong brand within our community, and I think it would be worthy for us to keep that brand, because I'm sure it can be somebody else will think of it and swipe it. Tony.
Well, Your Worship, I guess this is probably stating the obvious for a number of you, but just in terms of the administration costs, so this is not the broader administration of this activity in council is not just about the administering of the distribution of the funds. That as Calvin alluded to, that there's a lot of local government administration, but there's a lot of just good practice stuff. So in terms of local government administration, the preparation of a statement of intent, a 6-monthly report, an annual report, having that audited, and I'm not sure exactly, but I know years ago the audit was around $6,000 to $7,000. I'm sure it'd be higher than that now. But then just the administration of supporting that committee of activity, you know, the Wellbeing Trust, it's no different to supporting one of your standing committees. You know, there's an amount of support, like I know that Alison's part of it as an executive team member. There's other staff supporting it, so it's actually quite a support network through both good practice and local government requirements around transparency and accountability, that you're essentially being able to pass to somebody else that has that, so that we can have our staff focused on core business.
That's what I refer to, Tony, as a bit of a false economy. When we're distributing just over $100,000 a year, but it's probably when you take in the fees and what it costs behind the scene to run a CCO and those support services, or actually it's probably far greater than 39 cents in a dollar, to be honest, and far more time consuming. So look, I just think this what we're looking to do here is a way to actually avoid that for the future, but still give us the opportunities that we currently have around distribution. Julie.
Thank you, Your Worship. For Councillor Maguire, one of the things that we can do, Nick and I can do afterwards, is take him through the actual evidence-based information that we have that shows how much it costs to administer the running of the grants. And I can do that for anybody, but in particular for Councillor Maguire, where that's the biggest concern at the moment, is provide Councillor Maguire with the evidence that shows how much we are spending. And you're quite right, it's probably heading more towards 41 cents in the dollar. So we'll be able to provide that information.
I think where it gets lost is, as trustees, we only see our actual costs, but we don't see the costs of the likes of yourself, Julie, Nick, Alison and her team that actually support it, no different than any other committee of council. And we all know they cost money to run. Yeah. Those are the costs that we don't calculate as trustees. And I think this is where part of the false economy comes in, not understanding that. Alison.
Thank you.
So I just wanted to say, Your Worship, that setting aside the efficiency issues and the cost of administration, the true opportunity here is about being able to grow this fund through philanthropic means. It's not about just having good management, fund management. It's about people being able to contribute to it. We can't have donee status. People cannot give us money, and for them to be treated as a charity. So actually, we're cutting that's the real prize, is to actually be able to grow the funds. So yes, the administration stuff, we sort of get a bit tied up with that, but that's not the real opportunity and benefit here. So just wanted to make that point.
Right, thanks, Alison, and that is a good point too, because at the moment, who would give money to a trust within the council to be administrated by council? I don't think too many people would. So I think the fact is that is an opportunity that can be promoted as part of it. And I know that Momentum actually do a lot of promotional work around that sort of thing, where we could benefit from wealthy people within our own district, and we do know we have one or two. So yeah, they probably just need to be spoken to. Okay, I'll wrap it up with Councillor Church.
Thank you, Your Worship. Yeah, just following on from that, that's it's smart money, and that's why I'm supportive of the idea. But what research have we got that we've done to back up this assumption? Because it's still it's in our rohi and boundary of the Waikato District Council. I get that, but then what actuals do we know that someone who's got money to give won't give it to one of the myriad others? That this work that we're doing will, have these people come to our fund.
I can respond to that. What we can do is, for any, in order to provide that evidence, some of that we can base on the level of inquiries and connections that, in particular, Momentum receives, where they have connections in with various prospective donors. So that is because they are set up as a community foundation and a conduit for philanthropy across the region. They are often the first point of call for many people that are looking to give, whether it is a business or an individual or a family trust. So there is information there that we can provide that shows the level of interest from potential donors, and then we can look at, you know, things like the proximity of that, you know, where these people are located. There's obviously some sensitivities around certain details, but there's certainly evidence that we can give to you around the potential for other donors that may be in a position to contribute to the trust. And just on that point, I'd just like to second what Alison said. To me, that's the critical, you know, thing that we need to factor in here, is it is that opportunity around, especially if the fund management sits with an organization that also happens to be the first point of call for many prospective donors. If we have a presence there, it means that we have a much better chance of actually trying to link up potential donors to support the growth of this fund. So it's a really good point, and it's one that I can make sure that in the report, in any next steps for decision making, that we can address that point and give you the evidence as to why, you know, why we believe that this is a workable option.
Yeah, thank you. That's why I think it's important, Nick, and because it's an assumption that we're making, but that is the golden egg. So, you know, and if I'm a funder, if I've got money to spare and I live in, you know, Ngarawahia, then it's not just to the Wellbeing Trust, right? So that they go to Momentum, that money could go into Momentum, it could go into Trust Waikato, it could go into a myriad. But even if it goes to Momentum, it doesn't mean it's then going to necessarily segue into our Wellbeing Trust. So that's why I really, you know, in any decision that we're making, we should be having a bit more data around, because that's a big assumption and it's the big golden egg. But to back it up with with a bit more gravitas, which I'm not seeing yet. Thank you.
Yep. And you're quite right, that hasn't been presented. So we would make sure that, especially alongside presenting the information that Councillor Maguire mentioned about being able to have a true comparison between the different options, so that, yeah, we can make sure that that's covered in the next steps.
All right, everybody, I think we've probably thrashed this one out this morning. I'm not hearing anybody vehemently opposed to this. I think the important thing is we still have the distribution to fund to distribute once it comes back to us. So it's not as if we're taking money away from ourselves. We're just looking for a different management model, which I think is better suited for keeping this together in perpetuity versus leaving it within the whim of councillors. And if I go back just before I became mayor and this money came in, I know back when, no disrespect to Peter, but if it had stayed within council the way Peter wanted it, it would have been well gone. I can tell you that now. So, and I think Rob would actually probably attest to that too. I think it would
totally disagree. I totally agree. Yeah, it's gone.
It would have gone. So I think the trustees at large have done an incredible job in growing this pool, but let's see if we can grow it for future generations. So all I'd suggest at this stage that the working group go away and work out next steps and come back to us. And I think there's been some good, interesting questions raised here today. If you can just bring back a bit more information around that, and we'll move to the next level.
Thank you.
Thank you for the opportunity.
No, well done, team. Thank you very much to the working group that have been working on this. Do appreciate your hard work and effort.
Thank you.
Thank you, everybody.
Cheers.
Cheers.